Hi, welcome again to another edition of Market Analysis for today, October 2nd of 2024. I'm Giovanni Benacourt, and this is a recording previous to the open of the U.S. session. All right, so the stock market has been largely unfazed by tensions in the Middle East so far. That could be about to change, and investors might want to watch Chinese shares for the first signs of panic. Iran's missile attack on Israel Tuesday caused a brief spike in oil prices and a classic flight to safety. Now, investors are awaiting Israel's next move, and the volatility index, or VIX, known as the market's fear gauge, has risen sharply amid fears of disruption to oil supplies and the transportation of crude. If the previous missile strike on Israel by Iran in April is an indicator, this latest escalation could be short-lived and looked at purely from an investment point of view. Could provide a buying opportunity. Could. However, there are reasons to be more wary now. Israel's strike against Hezbollah has shifted the regional balance of power, and U.S. politicians' ability to influence events could be hampered by the coming presidential election. Meanwhile, Saudi Arabia is piling more pressure on its OPEC allies to toe the line on oil production quotas. The likelihood of a crude price shock seems to be rising. That might not be a significant concern for American investors, considering the strength of U.S. domestic oil production. However, the same can be said for China, which is heavily dependent on Middle East oil. Chinese stocks have enjoyed a historic rally over the past couple of weeks amid hope that stimulus from Beijing will reignite economic growth. Now, one thing to keep in mind about China is that they have entered a what they call a golden week, which is a holiday for them for the entire week. So perhaps also low volume in the Chinese stock market could be seen. Now, the China trade is now crowded one with distinct signs of euphoria and could be seen as a FOMO moment. An energy shock could stop that in its tracks and send reverberations through global markets. So with that being said, let's take a look at what we can speculate in today's market fluctuation. So we are holding the pivot point from last week in regards to the Nasdaq, which is the white line. So now looking for a level of support, it just jumps at me. Basically, this triple bottom created here in this area in the daily chart. So that's where I am going to be placing my level of support. A triple bottom usually signifies a bullish uptrend or a bullish momentum, okay? And then basically that's what we saw. Triple bottom and boom. Now, from this triple bottom, we had actually made that high in the market, and from here we have declined or retreated, made a retracement. So it comes to 19,650, which is nicely placed. So that's where we're gonna have our level of support. Now we can use the pivot point as a resistance level, which I believe that's what the pivot are. When the market is below, they act as a magnet anyhow, so they attract the market towards it, may or may not, but that's just technical analysis jargon. So in that essence, I'm gonna leave the levels that the pivot and this level of resistance. So this is resistance 1 and this is 2, and this is the all-time high up here for those of you who are wondering. So at the moment, if the VIX is implying volatility fear, that means a fluctuation to the downside. So going along with it, we could probably contemplate a move to the downside. Initially 19,800, just because it's a nice psychological round number. So it's 800. So that could be our first level, which is basically yesterday's low. Okay, so we could probably come and revisit that low. So from here, we could probably just continue or not, or rebound. Let's just see what will happen. That's in the Nasdaq. Okay, let's take a look at the S&P 500. So the S&P 500 the market is actually just bouncing off that level of support that we have placed yesterday. So we need to obviously give a new one. And right here, this big gap that is way too low for me. We do have 5,700 right there. So that's a psychological number, round number, if you will. So boom, that's going to be our level of support, and the pivot point is going to be a level of resistance, and we're going to continue to hold that level of resistance we placed yesterday, or we can actually just bring it down to just triple top, quadruple top almost. So let's just do that. Okay, this you see it. You see this right here. Okay, this can be right here. Boom. That's a triple top. For me, it's a triple top, even though however you want to look at it, by the wicks or by the top of the market. We can also use it, which is right around 5,800. But I'm just going to use the top of the wicks as my level of support. Resistance. So let's just bring that down to touch them. All right. So here we go. That's for the S&P 500. And yeah, continue to the rhetoric for now is to the downside. The Dow is also so Dow hasn't violated the support that we have placed yesterday as the previous two, so we're gonna keep those. All the levels are gonna be the same. So let's see if we are able to sustain ourselves within the range and just do some shopping as I was trading until things kind of work themselves out. So and there also the market has kind of almost touched our level of support, so it's gotten there. So I could just lower it down to the 50-day moving average. So that's could be. I mean, if we can continue to move lower, we're gonna say, okay, well, that's gonna most likely continue to even go lower than that. But that's in just our initial level of support. Now, resistance, we're just gonna use yesterday's open right around there as our level of resistance in the Russell. Take a look at crude oil. Okay, so crude oil. This is the one that has been just obviously in the talks about what was going to happen with crude oil. Obviously, yesterday we saw that fluctuation because of the attack. It had been said it was coming. So boom, it happened. Now fluctuation to the upside. 50-day moving average is going to be our first level of resistance because it's the moving average. All right. So the RSI is further away, is above 50, which implies a build-up, a momentum to the upside. So let's go along with it. You see here, the RSI 50. So moving to the upside here. Now, $74 is what jumps at me. So you can use any other level of resistances, but I like to use round numbers since we are basically at 72. Why we use that, right? 50 could be our first target for it. So the 74. Let's just use 74. Now, the middle point or the medium of the Bollinger Band always acts as a nice level of support. The market seems to fluctuate towards it and rebounds. There's a reversal of that a whole lot. So now I'm just going to use that as my level of support. So they just continue to speculate that the fluctuation to the upside is going to continue just because of this turmoil. Nat Gas has fluctuated above our level of resistance that we placed yesterday. Yesterday, it kind of came close to it, but it didn't. So let's just use 280, all right, 280 and 260, which was a previous level of support. So RSI has entered overbought territory. So if you want to use one of the tools to measure an extension, let's see if we are able to do it. So you can go. So it's 1, 2, 3, 4, 5. Let's just use this low from this first low. Okay, and to today's high and to today's open, and then we can come and see where the Fibonacci values are, which is 0.38 and 0.618 and 0.78 are. So we can use those levels as a probable level of extension. The 0.50 is not a Fibonacci number. So the 0.618 is the golden ratio. So that's where the market could probably come to, which is right above our level of resistance. So that's, you can just use that as, a way of be measuring, finding levels with a different tool. So that's Nat Gas to the upside. Gold. All right. So gold. I have two resistances for it and two supports. Why did you do that? Okay, so it moved. All right, so this is resistance 1. This is resistance 2. All right, and this is support 1, support 2. So here on gold, I'm looking at that 2,700. Initially, we want to, obviously, our first resistance is that all-time high created on the 26th of September. So that's when the market needs to come back towards 2. Right now, it's just fluctuating to the downside. Probably some profit taking some off the table, repositioning. So as we come down to our first level of support, we probably, let's see if we'll find that those buyers there to give it another leg to the upside and revisit that high, and then perhaps fluctuate above that resistance. So the mechanics of this, come on. Why are you playing with me today? All right, so the mechanics could be fluctuate to the upside, violate that first resistance, do a throwback, which is now a previous resistance, now a support, right?
Orchestrate that from outside.
Raise. There you go.
There's just no historic precedent.
All right, so this thing is right. So we do fluctuate to the upside across the level of resistance, do a throwback to now support, and then something like this could probably happen. Now, since we are trending lower, we probably just continue to trend lower, find that support, and just do a reversal to the upside. Or we could probably just continue to fluctuate lower past that level of support, and then do a pullback, and then just continue its move downwards. I mean, there's some different ways. Many different ways that this will happen, but this level of support sits on a double bottom, which indicates bullish momentum being created, or bullish momentum to the upside, obviously. So let's see what will happen today. For gold, it's a safe haven asset, flight to risk asset. So that's the canary for it. So also silver, it did fluctuate lower today, but it has recuperated itself, looking to fluctuate. Let's just keep that double top that was created last week as a level of resistance, and that 3060, which basically is from the bottom, previously also made. So let's just see if it'll be able to fluctuate outside of those levels. Copper, on the other hand, on Friday had just a big gap up, but it just closing the downside. So let's see, today it's looking mighty bullish. So let's see if it continues and see if we'll reach 465, or it'll just stay there, just fluctuating to it sideways. Bitcoin. All right, so Bitcoin has surpassed my levels of support that I have here. So let's just use now for Bitcoin. Look, it's fluctuating to the downside strongly. All right, well, this double bottom right here. Boom, right here, the double bottom. That's our level of support, our first level of support. So let me just bring down another, or maybe we could just do two level of supports. Let's just use 60,000 as our first level of support, just because it's a psychological round number, and then that second double bottom. All right. So as far as resistance for this 200 is above the market. The 20 and the 50 are above the market. So this could be the second. Let's just use our 200-day moving average as our first level of support, right? And then this triple top created as our second level of resistance, sorry. So first level of resistance, second level of resistance. Here we are. So let's see if today Bitcoin will recuperate itself. The euro is down at the bottom, 110. So 110 is going to be where we are going to place our level of support and then bring it down to basically 115, 111 and a half. That's actually 111, which is basically where the medium line of the Bollinger Band is. So let's just keep that there. Pound. All right, so the pound is just sideways trading. The medium is acting as a level of support. Then this double bottom here as another level of support, second level of support. Then we have the stop here, quadruple top, as a second level of resistance. And then the 134,500-ish as a first level of resistance for the pound. So right now it just is looking for traction, for their direction. So far it's just trading sideways. Dollar index, usually it has fluctuated to the upside. So let's just use that 50-day moving average as a level of resistance, and then use 100, 500 as a level of support. So let's see if it'll recuperate as well, continue to move higher. That happens, and we'll see that those currencies fluctuate to the downside, and as well as other things, as much as metals. Also, crude oil could be benefited. Could not be benefited, be placing some resistance on this, because obviously as dollar increments, that makes it more expensive for other countries to buy that crude oil or any other commodities. That's it for me today. Have a great trading day and be safe. See you tomorrow.